Hey guys, welcome back to the channel. In this video, we are going to review tax implication of a lease car on financial statements, including VAT, accounts, corporation tax, and personal tax done. Number one, VAT. We can claim back 100% VAT on lease payment unless car is not being used for a personal benefits or personal travel. Let's suppose you are a director of a company. You have a company lease car, and for that lease car you are driving through for your personal journey as well as your business journey. Under that circumstances, you are using a car for your business purpose as well as your private use. Under that circumstances, we are now going to claim only 50% VAT on the lease payments. And then in other way around, you have a business car or company lease car, and then you are using only that car only for the business travel, business meetings, or business journey. For these cars, we are reclaiming 100% VAT on the lease payments into our VAT returns. HMRC guidance on personal use is, if you have declared that your car is solely and exclusively for a business purpose, then in that case you are not allowed to take company car back to your home. You are not allowed to use that car for your private journeys, and you are not allowed to take any personal journey through that car. This car or the lease company car will always be on the company premises within the business hours and outside the business hours. Number two, accounts and corporation tax. When it comes to financial statements, we need to bear in mind two things. When we have an agreement with a leasing company, what is the terms of agreement that we have laid down in a contract? Whether the company will own the car at the end of leasing terms, or whether the company will return the car back to the leasing company after the certain period of leasing term. Let's suppose leasing terms are 3 years, and then after that 3 years, leasing company have to return back leasing car to the leasing company. In that case, we are not going to record any asset into the financial statement or into the balance sheet, and we are not going to record any financial lease liability into the balance sheet. And in other way around, if the lease agreement says our company is going to retain the car after the certain period, let's suppose 3 years, in that case we are going to record that lease car into our balance sheet as a fixed asset, and then we have to record financial liability into our balance sheet. Once we have record lease car into our balance sheet as a fixed asset, then we are allowed to claim capital allowance on that car. Expenses like repair and maintenance, car insurance are all deductible expenses. Fuel cost, petrol, cost of electricity for electric vehicles are also deductible expenses only if the car travel is used 100% wholly and exclusively for the business trips. And obviously, once you deduct all of these expenses from your income, then your profit will be reduced. Once your profit will be reduced, it's obviously reduce the corporation tax. In the VAT section, we have learned that if the leasing car is being used for private or personal travel, then we are only allowed to claim 50% VAT on a lease payment. And let's suppose car is being used for a private travel or journey. That in that case, it means we are getting a benefit in kind from a company. In that case, company needs to file P11D to HMRC and then we have to use being a director of the company or as an employee of the company to use that P11D, and then we have to use the figure that is coming up on the P11D to put it on our personal tax return. And then once we declare that P11D on our personal tax return, so we have to pay personal tax return or personal income tax on that P11D figure. In VAT section, we have learned that if the car is being used for a private or personal travel, then we have to claim only 50% VAT on lease payments. And let's suppose same is the case, leasing car is being used for a private or personal travel, then it is company responsibility to declare that car under benefit in kind and then pay a national insurance contribution on that benefit in kind, and then use that P11D, either director or company, to declare that P11D figure on his personal tax return and then pay a personal income tax on the benefit kind in figure. There are two implications. One, company has to declare that car under P11D and then has to pay national insurance contribution. Secondly, that car will be declared on personal tax return and has to be paid a personal tax on benefit in kind. We have learned 3 tax implications of a leasing car: VAT, accounts and tax, corporation tax, and then personal tax return. If you want to add or if you want me to record a video or any other topics, please let me know under comment section. As always, it's always great to be back. Thanks ahead. Salute. Until the next video.